As we talked about last week, if we are to be successful equity investors, we have to emotionally come to terms with the fact that every day when we wake up, it's possible that something terrible might happen in the world today to cause the equity markets to plunge. Today could be the day that terrorist attack, massive hurricane, economic recession, or geopolitical crisis could strike and cause the global equity markets to completely tank. Sometimes it'll even seem like those disasters are moving from the realm of the possible into the realm of the probable. Sometimes disasters like these might actually happen and cause the stock market to temporarily crash. During times like these, it's only human nature for investors to wonder if it might be best to be on the sideline until the situation becomes clearer. In times of significant uncertainty, investors who are heavily invested in equities will be tempted to sell those equities. And those who are sitting on a pile of cash they need to invest will be tempted to wait until the coast is clear. This is only human nature, but it's also a big mistake. Getting out or staying out of the equity market is only half of a strategy. If one intends to reap the long-term rewards of being an equity investor, he or she must also have a strategy for getting back into the equity market. And therein lies the difficulty. It's not enough to make ourselves some vague promise that we'll get back in when the situation becomes clearer. In fact, having sold out of an equity portfolio, only one of two things will happen. First, you might be right. The market might decline as that prior uncertainty gets even worse. Because your logic was to wait until the situation improves, you're still going to feel terribly uncertain and even less likely to take advantage of these lower prices that are now available in the market. And instead, you'll wait until the situation resolves itself. By the time the situation resolves itself, the overwhelming odds are that the market will be long gone to the upside, and you'll end up buying back that same stock portfolio you used to own at a higher price. Or second, you might be wrong entirely, and the market will recover quickly and increase. If you can muster the courage, you'll reluctantly buy back your stock portfolio at a higher price. After all, if you didn't like stock prices here, how are you going to bring yourself to buy stocks up here? The impulse to get out of the market in uncertain times is incredibly powerful and may seem like the most logical plan in the world. It's also as close to a promise of substandard investment returns as you can possibly get. In fact, it may turn out to be the worst investing mistake you ever made.